Hi everyone, good day. I am Ronica Brown and I help business owners to increase their profits and cash flow with tax planning and cash management strategies. Today I want to talk about estimated taxes. This is a question that I get a lot from seasoned business owners and also people that are new in business. When do they need to make estimated taxes? Do they need to pay estimated taxes based on how they're paying themselves and certain different factors that are going on in their business? So I'm going to address who need to make estimated payments. What about when you're on payroll and different factors, that basically will point to the fact that yes, you need to make estimated payment in your business. Hi, Kenisha. So the short answer to this question is yes. If you have a business, if you're operating a business, then most likely you will be paying estimated payment. You should be paying estimated tax payment. And the reason for this is estimated payments, you pay this amount on the profits that your business make. I talked yesterday that, when your business makes a profit, that's basically what your taxes are based on, and that's what your estimated payments are based on. Well, most small business owners, they are flow through entities, meaning that their tax get paid on their individual return. So if you're a LLC, in a partnership, or if you have a S corporation, if you elected to be taxed as an S corporation, then all the money that the business made just basically move on to you after you take care of the business activity, and then you make the payment when you file you make the payment based on what's going on your individual return plus your business operations. So with that said, for your business return, for your estimated payment, if you're an LLC, a partnership, or S corporation, then you make this payment into your individual name with your social security number. So you don't send it in the business name or anything, because most likely you're going to run into misapplied payments and so forth. Because remember that the amount that is due shows up on your individual return. It does not show up on your business return. So there are two types of estimated payment that most business owners have to pay, and they include the federal. So the federal is paid to AKA the IRS, AKA our friends at IRS. So that's where you send the largest portion of your estimated taxes to the federal government. And then a small portion will go to your state government. So if you live in a state that has an income tax, then you're most likely paying estimated payments to that state. So normally a lot of times what business owners do, they only send the federal. So you should also send two payments, federal and state. And the state is really important, and I'm going to share the reason why. If you're claiming the itemized deduction, which the itemized deduction is very dicey right now in 2018, a lot of people won't be able to claim it anymore. But if you find yourself still claiming the itemized deduction in 2018 going forward, then you also want to make your state estimated tax payment, because you get a deduction for it on your federal return. So it will actually reduce how much you have to pay to the IRS by making your state payment. The federal payment, you don't get a deduction anywhere for it, but you do for your state estimated taxes. So you also want to make sure that your state payments get paid in. And a lot of people, I'm not sure if they don't know this or what's the issue why they don't send the state, but they send the federal, but the state is the one that gives you a deduction in the end when you file your return. So here's where it gets confusing. A lot of business owners, well, not a lot, some business owners, especially people who are taxed as S corporation, they put themselves on payroll. What I mean by payroll is when you have a formal payroll service that you say, okay, I'm gonna pay myself, let's say $5,000 this month or whatever that number is, then they'll go ahead and withhold all the taxes. So it's basically you're acting like an employee in your business, which, as I said, if you have a C corporation or an S corporation, that's perfectly fine for you to be an employee shareholder. So you pay yourself through payroll, they take the taxes out and send it to the government. And at the end of the year, you get a Form W-2. So if you're doing this, do you still need to make an estimated payment? And the answer is yes, you still need to make estimated payment. And the reason is, remember I mentioned that the estimated is based on your profit. So the only reason why you would not make an estimated payment in this scenario is if after you pay yourself, your business ends up in a loss position. And what I mean by that is, you have you report no profit or a negative number at the end of the day, then you won't have to send an estimated payment because you're in a negative, right? But if you're in the positive after you pay yourself, and let's just use some simple numbers. So for instance, after all your deductions and everything, you make $10,000. Then you pay yourself $5,000. So your W-2 will only have the $5,000 that you pay yourself, and the next $5,000 would be what gets reported as profit on your S corporation return or your corporation or whatever return that you're filing. Then your estimated payment will be based on your $5,000. So that's the two parts that you have to think about, that even though you may be using like a formal payroll service, then you still have to make an estimated payment if you're still reporting a profit after. So as I mentioned that, if you're operating a business, then most likely, yes, that you have to make estimated payment. How you compute the estimated payment and what factors determine what's included in your estimated payment determines on how you factor all your deductions. What are you taking all your reimbursements? Are you factoring all the other things that goes on? So you basically need to come up with a number based on all your write-offs before you send them a check, because you don't want to send them a check for too much money. You want to send them a check for the exact amount so that you don't have to wait for them to refund you the money, right? And then, keeping, cash flow, preserving your cash is key. So you don't want to send the IRS too much money because they're going to wait. They're going to take too long to send it back to you. So you should, factor in, all the deductions that you're going to take. It's kind of like doing like a mock of your tax return or something. Just, take a write-off for all the deductions, then you go ahead and send them a payment. Or to make it quick and easy, you can just look at how much you're making on a monthly basis and send a percentage of that, whether that's 15 or 20% of that amount. If you live in a state like California or New York, then whatever your monthly income is, then you may need to start putting aside like about 30% because the state portion of your taxes is really high. But if you live in a state where the state taxes are around 6%, then 15 to 20% will work for you, providing that you're doing what you're supposed to do to reduce the taxes on the federal side to keep your tax rate low. So as I mentioned that if you're in business, yes, you still need to make an estimated payment. If you're on payroll and your business report a profit after you pay yourself, then you still need to make estimated payment in order to be fully paid in. And a good benchmark of what's the minimum amount that you have to be paid in is basically, let's see, 90% of prior year taxes. So for instance, if you owed, $3,000 last year to paying for this year, you have to pay in at least 90% of that. So that's like the minimum threshold for you to not get, underpayment penalties and so forth, to be able to send to them. And then whatever the balance is on your return, once you file it in March or April, then you'll be able to make those payments. So, as I mentioned that, these payments are based on your profit. You do not want to fool yourself to not make a profit, because pretty much if you're not making a profit, it means that you're not operating a healthy business. So what I see a lot of some business owners may try to, do all these things and spend all their money to try to end up in a loss position at the end of the year so that they don't have to make estimated payments and so forth. But remember, there are two, paying taxes and having money. They kind of they're both going a positive direction. So I can guarantee you, if you pay that spending all your money to not pay taxes game, that you will never have any money. And I see it over and over and over again. So don't fool yourself, because we all know that the percentage that you're paying, if you spend $1, in most cases you're only saving 25 cents, 30 cents based on your rate. So if you don't have to spend the money, don't spend it. It's better to send a check for the 20 cents rather than lose the entire $1, I would say. And in business, preserving your cash flow is the key. It helps you to be able to invest in yourself, invest in your business, hire employees and contractors, and take things to the next level. So you still want to preserve your cash flow and don't overly spend your money just to avoid taxes, because it's not a dollar for dollar case. If you spend $3,000, you're not going to save $3,000. You're going to only save a small percentage of it. So what I would recommend is just tax planning, so that you can tell pretty much how much you're going to owe before you even start making the money and so forth. And then you can plan ahead of time to get all the write-offs that you need to get, so that you can make sure that you receive everything. In closing, I would say, let me know if you have any question. If you need a quick and dirty way on how to factor in these estimated taxes in your monthly budget projection, whatever you call that process, then send me a message. I'll be happy to send it to you. If you have any questions, I'll be happy to send those questions. I'll be happy to answer your questions. Hi, Sabrina. Hi, Tom. But anyways, that's it for today. Hope you learned something. Thank you for watching, and I'll see you again. Thank you.